So ChatGPT, tell me a little bit about private equity and tell me as if I were 18 years old and didn't know anything about finance.
Sure. Imagine you have a group of people who pool their money together to buy companies. They do this because they believe they can make these companies better and more valuable. This is called private equity. Once the company becomes more valuable, they can sell it for a profit. Private equity is like investing in a business to help it grow and then selling it later for more money. It's a way to make money by improving businesses.
Hey everybody, welcome to Private Equity Rundown. I'm Bill, the company's expert. Thank you for joining me today. This is the first episode of something a little new, a little bit different that I'm trying on my channel. We're going to be talking about something called private equity. If you've ever wondered how the rich get rich and stay rich, this is one of the ways. Now, if you're like a private equity professional and you've come here looking for very advanced advice, that's not what I'm doing. I'm starting with the basics and I'm exposing people to the concept of what this is, and we're going to have a little fun with it. So, public service announcements. First of all, thank you for joining me. You are awesome. Thank you to my YouTube channel members, my Patreons, my super thanks donors, and of course to you, all my participants. This is something that if you've never heard of this stuff and you're a little bit curious, that's who I'm basically talking to here. I myself do not work in private equity. I have a master's degree in finance. I've been a CEO of a company and I know of it. I've had dealings with it, but I've never actually worked in it. And I find certain elements of it fascinating. And I'm of the opinion that those certain elements can be used to help improve everybody's career if you're aware of them. So that's the intention with this. Now, this is a interactive live stream. So like usual, there is a chat box so you can ask me questions. Because this is the first attempt at this, I really don't have too much of a rigid sort of agenda going down. So you can ask questions and we'll see if I can answer them. I should be able to speak to them, definitely. But let's get into this. This is something that I have found fascinating for many years. And I was first exposed to it really when I was a CEO, because it sort of entered the picture a few times, and it was something that I could tell that I was sort of it was a little bit out of my depth, but there were certain elements of it that I was fascinated by and I wanted to learn. And let's start with the basics. So you guys probably know about flipping houses, right? You buy a house, you do some cosmetic stuff to it. You put in hardwood floors or whatever and granite countertops and all the kind of bells and whistles that people go nuts over. And then you turn around and you sell it for a much higher price. And it's usually you're selling it for a lot more money than what you put into it. So you make a profit. That's the idea of flipping a house. Now, there's definitely for me an ethical element in this. I'm definitely, there's definitely an ethical gray area. And if you do it in a forthright way, you actually improve things, you don't try and obfuscate or deceive anyone, then I can see it being a legitimate thing. There are some people that do that. There's also people that go the other way and they, it's almost like a really underhanded, unethical swindle where they'll come in, they'll paint the walls, they'll do very, very cheap things to it. They'll make you believe that it's a lot fancier than what it is and a lot better built than what it is. And they'll charge an exorbitant amount of money for it, and some people fall for it. And that's a very unethical thing, in my opinion. It's legal, but it's unethical. Private equity is kind of the same thing, only that you're not doing it to a house. You're doing it to a business. Now, many of you out there, you've probably been in a situation where you're an employee and your company has been purchased by another entity, right? You've been acquired, right? Maybe it's a form of a merger where you've merged with another company, or this is just, you've been bought outright and there's new owners, there's a new sheriff in town. And, so you may have been indirectly involved in private equity, because that's what private equity companies do. Instead of flipping houses, they flip businesses. And like houses, there are some companies, I understand, that are rather unethical about it. And there are other companies that actually, are a bit above board, and they actually improve the company. And it's not about making a quick buck. It's actually about improving businesses and getting them healthy and getting them to outperform, and then making your money off that. So that's kind of the deal. Now, there you go. That's basically the basics of it. Now, in the past, this was actually called something different. This was called leverage buyout, LBO, and that's the term that I'm more familiar with, because back when I went to school and stuff, that's what they called it. They didn't mention private equity, a couple decades ago. So if you've heard that term LBO, a leverage buyout, or a variation of it, which is a MBO, a management buyout, it's the same thing. And this is something that it's an option that's available usually to entities, not necessarily individuals. There are some high net worth individuals that participate in this. If you're like really rich or you're upper middle class, you can maybe get into this, but principally it's for institutional investors. But I'm talking here, I'd like to talk about the concepts, because I believe that they can come downstream to regular Joes, to people who think like this, that can use this to either do entrepreneurship type stuff or to do interesting things in their career. I see there are 8 people here. Thank you for being here. Okay, so let's start. Okay, so what does a private equity firm do? Okay, basically what you do is you buy the business. Now, there's one really interesting element of this to me, okay? And I think it should be of interest to many, many people, because it explains a great deal of what we see out in the real world. And that is leverage, financial leverage, okay? If you've never heard of this, see if you can understand this, okay? So let's pretend that there's a business, okay? It's a business and it costs $10 million, okay? So if you wanted to buy that business, you would need to scrape together $10 million. Now, let's pretend that you don't have $10 million. Let's just pretend that for a second, okay? But you do have $1 million, okay? You could get $1 million in cash together. Now, here's this interesting factor, okay? Let's pretend that you go to the bank and you tell the bank, I would like a loan for $9 million. Because if I combine a loan for $9 million, if you give me $9 million and I have $1 million of my own, that leaves me with $10 million, and now I can buy this business, right? Now, the way that works is that if you walk into a bank and say, can I have a loan for $9 million? They'll probably laugh you right out of the place, right? But the way it works is you say, okay, here's what I'm going to do. If you lend me $9 million, we're going to secure it against the business. The business itself will be the collateral. Just like when you buy a car or you buy something or anything and you take a loan, the loan is secured against the thing you're buying, right? So if you buy a fancy car, you say, you know what? I'm tired of my Volkswagen Beetle and I want to buy a Lamborghini. So you go down to the bank and you say, I'd like a loan for X amount of money, and it's going to be secured against the Lamborghini. So if I don't pay back the money when I'm supposed to, you can come and take my car, right? So going back to private equity, so imagine you got $1 million, you've just borrowed $9 million from the bank, and they've secured that $9 million loan against the business itself, okay? Now you can buy the business. And this is why debt is used so much. This is one of the reasons why debt is actually regarded as a good thing in business, because you only have $1 million, but now you're owning and controlling something that costs $10 million. Okay, so that's what they do. Now, let's pretend you buy the business. So you're in charge. Now, let's pretend that you actually know how to improve the business. Okay, you are in the same, you had a career in the same industry that business is in, you understand the business, you have a lot of connections, you know how to do things properly, right? So you go in there and you start making changes and the business starts improving. And let's say 5 years later, the business is no longer worth $10 million. It's worth 15. So you've managed to grow the value of the business by $5 million. Great. So you bought it for 10 using 1 million of your own money. And now it's worth 15. Okay. Now maybe you'd like to sell it. Okay. So it's worth 15. However, you still have a loan of $9 million that you took out, right? So if you were to sell it, you don't get to keep the $15 million, right? You first have to pay the bank back. Let's say you've been just making interest payments on that loan the whole time. You haven't paid off any of the principal. So what you do is you subtract $9 million from the 15 you got by selling the business, and that leaves you with what? $6 million of your own. That's right. So you've turned $1 million of your own money into $6 million in 5 years. Okay, so that's an increase of $5 million on $1 million. So that's a return of 500%. So that's basically what private equity does. That's why people like it. That's why it's a thing. And, this is done by bankers, and the bankers hire managers and put them in place to run the business, or it's done by individuals who buy the business and then run it themselves and improve it, hopefully, and then sell it. And there you go. In the chat, let's go to the chat very briefly. Dimitri says, it seems to me you already told everything you could about job search interviews. I'm excited to hear more in-depth material. Yeah. Well, this is kind of a totally different topic, obviously, than job search. But very loosely, I'm including it here because it's sort of related to careers, right? Now, I do a live stream on Mondays called Side Hustle Ideas, and that's about entrepreneurship and starting side hustles and things like that, or starting your own business. And, I group it together on this channel because they're all career options. Not everybody works as an employee. A lot of people don't. Some people have their own business and they work for themselves. That's one option, right? Other people do investing and stuff like that, and that's another option. This is kind of, it's not really related to either of those. It's just kind of what I wanted to go into were some of the principles involved, especially when we're talking about private equity. What I find fascinating about it is not so much the financials. There's like a lot of accountant types that do this kind of thing, a lot of finance types that they know finance and that's it. So they make great bankers. But I'm interested primarily from the perspective of, turning around a business, being able to run a business, how you can improve it, and how that relates to the financials, and how, therefore, it makes it either a desirable or undesirable target for private equity. There's also things that if you wisen up to this stuff, then you can do things like management buyouts, where you employ this principle. If you work your way up into management, you theoretically have the option that instead of working as a manager, like a senior manager as an employee, instead what you can do is you can say to the owners of the business, I'm going to buy you out, right? So you do essentially the thing I just described. You get a loan from the bank, and between the loan and your own money, you buy the business, right? So now you're no longer an employee, you're the owner of the business, and you're also working at the business. Now, if you think you can turn the business around and grow it, make it more profitable, then you could essentially sell the business in 5 years or a few years and make an absolute killing on it, right? Thanks to this idea of like the leverage buyout, where you're adding debt to your own money to buy it. So what that does is it increases the ratio, like essentially the return on investment. Because you're putting less money in to buy it, whatever increase it makes, the ratio between these two goes up, right? So it's about applying these principles. I don't know if anyone really is going to find this interesting. I don't know if anyone is going to be able to apply this. I'm thinking I would just like to talk about it. And as you saw in the opening of this stream, I was using ChatGPT. Hopefully that convinces you to get on ChatGPT. Their voice interface is especially useful, or any other chatbot, whatever, and just learn about this stuff. And we can go deeper. And I want to see if I can go deeper. Just bear with me a second here. Okay.
Got it. If you have any more questions or need more info, just let me know.
Let's pretend that I live in the city of Chicago and I want to get into, the private equity industry. Now, who are the major players in the private equity industry in Chicago? And what might be a great way to reach out to them and put myself forward as a candidate that could work with them in some capacity?
In Chicago, several major private equity firms are active. Sycamore Partners, for instance, has agreed to acquire Walgreens Boots Alliance in a deal valued at up to $23.7 billion, as reported by the Financial Times. Another significant player is GTCR, which focuses on leveraged buyouts and has invested over $15 billion in more than 200 companies since 1980, according to its official website. Additionally, Harrison Street Real Estate Capital specializes in real estate investments and manages approximately $55 billion in assets, as noted on Wikipedia. To put yourself forward as a candidate in the private equity industry, consider these steps. 1. Education. Pursue relevant courses in finance, business, or economics. Many professionals in this field have degrees in these areas. Networking. Attend industry events, join finance clubs, and connect with professionals on LinkedIn. Informational interviews can also be a great way to learn more about the industry. 3. Internships. Apply for internships at private equity firms or related financial institutions. Real-world experience is invaluable. 4. Skills. Develop strong analytical, financial modeling, and communication skills. Reaching out to professionals in the industry through networking and internships can help you get your foot in the door.
Thank you very much. First of all, before we go anywhere else with this, you saw what I did with ChatGPT. You saw how it can help you in your job search. Somebody mentioned job search, or what to do, how to reach out, how to contact a company, how to do a variety of things. And it's personalized for your city or your location. Use ChatGPT. It's an incredible tool. I mean, it's not the be-all, end-all, but it is definitely a very useful tool. It's not right all of the time, but it's right a hell of a lot of the time. Corroborate anything that's like really critical. So definitely a useful tool. Now, coming back to private equity, you saw how you can map out the landscape loosely with that tool and many others if you want to investigate this yourself, depending on what situation you're in. But yeah, like we ran through an example. We talked about the principle. I do see the chat, so hello to Skywalker4555. Thank you for joining us. Dimitri says it loosely sounds like what Carl Icahn does. Sorry, I'm not exactly down with the latest stuff. I don't know who Carl Icahn is, but yeah, a lot of people do it. I mean, it's like saying investments or bonds. It's like many people do it. It's part of a portfolio. Now, one thing that just some of the terminology here. A private equity company is a group of people that are like bankers that manage investments in private equity. And what they do is they buy companies. They buy and sell companies, right? And a lot of the time, what they'll do is they'll put their own management in place for that company. So they buy a company, they gradually, sort of rotate out the existing management, and then they put their own people in to run it, who are not bankers, but they're actually business managers, right? Preferably people that are from that industry, right? And that company becomes what's termed as a portfolio company. So just like you would have a portfolio of investments, you buy different stocks and different bonds and different commodities, all kinds of the various different types of investments, and you all have them together in a portfolio. The private equity firm has a portfolio of companies, right? And each company is an investment. Money goes in to buy it, and then money comes out when you sell it, right? Some types of investment, it produces money for you on a regular recurring basis. Like if you have stocks, they, just holding on to the stocks, they might pay dividends every quarter or something. Companies are like that. They do produce income every month, but usually the private equity company, as I understand it, leaves that alone. They manage it, but they don't sort of suck out all the profits as they're coming in. They own it, but they'll do various things to it. So they regard it as an investment. It's one of their portfolio companies. That's the terminology. And there you go. Now, I could go further with this. I don't know what direction I should go. I think that some of these principles in finance are very useful in that they can wake you up to some things that you can do. Certainly the thing with financial leverage is a thing. If you're wondering, what people use that for or why it's used, it's for essentially what I talked about here. People who are buying a company, for example, they usually prefer that company to be really, really in debt, because that way they can control something that's worth this much while only having put in something that's this much, right? The rest is debt, right? That's what it does for you. And the difference between the money you put in and the money it made, that ratio, the return on investment, that goes up tremendously when you do this. So generally what private equity companies do is they buy a company and then they just leverage it up with debt. They try to make it leaner and meaner and more efficient. That's the part I'm more interested in. But what they do is then they saddle the company with a ton of debt. And that's the part where I understand the financial reasons behind it, but in terms of real world stuff, it feels like certainly an ethical gray area, depending on how they do it. You know what I mean? And the other thing is that they generally look for targets, like companies to buy that are underperforming. So if you're the type of entrepreneur, you've been listening to my podcasts on entrepreneurship for quite a while, and you're into like running your own company and all this kind of stuff, one of your goals could be, when you are running your own company and you're growing it, is to be an attractive private equity acquisition target. So a private equity company will want to buy you, and they usually do that when they see that there's tremendous growth potential in it. Meaning that you don't have to be on your A game. You could be underperforming in your industry, and that would make you a more desirable target, because then there's more obvious improvements that a private equity company or some other owner could come in and make to your business to grow it, right? So that's definitely a thing. So it ties into the whole entrepreneurship thing very easily. Just so everybody knows, I'm going to keep these live streams rather short. I have another live stream in half an hour. So I figured I'd make these about half an hour. Let me know what you think. Is this the kind of thing you'd like me to go on about for like an hour, or it should be on the shorter side, maybe 20 minutes? Let me know your thoughts on that in the live chat, or if you have any questions about any of this. I'm opening it up to questions. If there's any questions, I will answer those before I sign off. But yeah, this is sort of the introduction. Also, your thoughts on the whole using ChatGPT thing. The reason I know it's available to everyone, and if you have a device you can see me on. You can probably use ChatGPT on. I'm well aware of that, but I'm trying to make a point for the people who are not using chatbots and AI tools like that, how useful they can be to help you do the things that you would like to do. That's why I try that. So let me know your thoughts on that. If you have any feedback, whether it worked or it didn't work, or you'd like me to do it again, let me know. If you have any requests of what topics within private equity and finance and business acquisition and career paths you'd like me to cover, let me know that too. I'm just sort of getting a feel for where this could go and what people are interested in. Dimitri says the longer the better. Okay, well that's good. That sounds nice. Thank you very much. That seems to suggest that you enjoy listening to me ramble on about this stuff. So that's great. Yeah, I'm thinking of making this a weekly thing at this time. So I'm in Central Time in North America. So it's noon for me. So I don't know if you're in North America. It'll be around the middle of the day. If you're elsewhere in the world, it'll be at this time. And send me any suggestions or topics you'd like me to cover, and I'll be happy to go down that direction. Because you see, this stuff, it's like if you're covering this little topic, it could go out in many different directions. We could talk about how to grow a business. We could talk about careers, either in the banking and finance side of this or in the management, business development, business growth side of things. We could go into, the sort of structure and what this means for corporate strategy and all this kind of thing. We could go into the accounting. I know there's some channels on YouTube that go really in depth into the accounting of private equity. We could talk about the career path to get into private equity. We could talk about other things. So it could really go outwards from here. Let me know what you're interested in, and that's where I'll go. So anyway, this was the first episode. This was a prototype. Thank you for being here. You are witness to me doing something a little bit outside my comfort zone and a little bit confused as to what I should do. But there you go. Thank you for joining me. If you would like to learn about this stuff, if you want to learn like the sort of backing about all this kind of stuff, as always, check out that course, the $100 MBA. There's a link to it in the description. Now, if you take that course, you can take all the finance parts of it. And there's many different parts of finance. You could talk about things like venture capital or that kind of like high risk sort of startup capital, startup investment, that kind of stuff, and learn about term sheets and all that kind of thing. You could talk about more mainstream sort of banking and finance, where they talk about things like private equity. They also talk about things like hedge funds, which is similar idea to private equity, but it's a little bit different. They don't focus so much on improving the company really that much, has been my understanding of it. They're sort of in and then they're out very quickly, as opposed to this stuff, where they're in for a few years before they're out. Just basics of finance, basics of accounting. Well, it's not really the basics. It's, pretty decent accounting, how to make financial decisions based on accounting and how to understand the accounting. Generally, in an MBA course, the accounting component is usually one of the more challenging parts of the course. It's a little bit harder than things like marketing and operations, but you get all of that in that course. It's actually more of a program than a course, but there you go. So check that out. If you want to break into this stuff, but you don't have 2 years and 5 figures worth of cash to invest in going to a university to learn this, you can get the same result essentially with that course. So check it out. Investment banking, venture capital will be great. Okay, definitely. You see, all these things are related. They're closely related. They're just different applications of the same thing. All I remember when I was studying venture capital like years ago was it was all term sheets, and it was like a completely different thing than, say, like understanding foreign exchange markets. Completely different. Okay, fair enough. I don't usually talk about venture capital too much. When I do talk about it, it's on the small scale. It's usually in the form of angel investors, and it's on my other live stream startup ideas, because that's where that stuff starts to come in. If you're starting a startup and you want someone to acquire it, or you want to work with an angel investor, we talk about that kind of stuff there. But thanks for the feedback, Dimitri. Thank you to Skywalker and everybody who is here. You guys are awesome. I'll see you soon. Take care.